Hi, this is Bill Wood with Disciplined Trading Decisions. It's time for the weekend update for the S&P 500. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Hi, and welcome to the weekend market recap. My name is Bill Wood. This week we're going to do something a little bit different. We're going to have 3 videos, all right, just on the S&P. So the first video is going to be on Elliott Wave. The second video will be on market geometry, and the third video will be on market profile. So with Elliott Wave, we're going to look at what is the count and also an alternate count. Is there a possibility of a new high? Just in general, what to expect next. Are we in a bear market now, or are we still in a bull? So how far can this go either way? And we're going to look at that. And we're also going to look at the bond yield to see if there are signs of recession. The next video will be on market geometry, and we're going to discuss, how far can this market go? Right now it's going down. How far can it go down? If it turns around and goes up, how far can we expect it to go up? And where is support and resistance? And we're going to use market geometry to determine all that. And then the third video will be on market profile. So what is happening behind the scenes? What are the clues to what is upcoming in market action? So market profile tells a story, and we want to discover what the story is that market profile is telling us. So we're going to look at the S&P 500, the Emini contract. This video is on market geometry. So if you watch any of these videos to the end, you can see the link for the next video in the series. Okay, so in this video, we are going to be looking at market geometry. We're looking at the ES, and this is a monthly chart. And you can see that we are in this channel and that this could come back pretty far, maybe all the way down to 2400, and still be within this channel, within this trend. Now, usually around market tops, you're going to find that the market gets more volatile. Certainly, volatility has sprung up since February. And you notice that we had one push down. That push down was around 12%. It came up, made a new high, and then we had a second push down. All right. And so let's look at our previous highs back here. So this previous high back here, we had a push down, and it was about 11%. It came up, made a new high, had a second push down around 14%. Then the market came up, could not make a new high, and then finally broke down. This is the 2008 high. You see that it pushed down around a little over 12%, made a new high, and then really fell out of bed. You had like this ABC pattern, tried to rally again, could not even get into this balance area up here. And as we look at today, you can see that things are a little more volatile. And we had the one big push down here, made a new high. Second big push down. This may be like an ABC pattern here. An ABC, it could go lower. So let's look at where this could actually go to. So this is a weekly chart. This is the February pullback where we had that volatility. I counted this as a triangle here. And now we have like this ABC pattern here, AB. And we could come all the way down to here. If C was going to equal A, then that would bring it all the way down to here. And if you look at where that is, if you look to the left, you're going to see that that is where we found resistance before, and resistance could become support. We also have this low here, and we also have in this area a low volume node. I'll show you that on the next chart. So in this area, you have the low volume node. This is the 100% level. Again, that's where this support was. Support could turn into resistance. This is where that low volume node is, and that is right here. So what happens if on Monday this just turns around and starts heading up? Well, that could explain a couple of things I haven't talked about in the last video, If we had 3 waves down here, 1, 2, 3, and then 3 waves up here, 1, 2, 3 for B, 3 waves down here for C, we could come up for a D and E for another triangle, and then maybe head up for a 5th wave. Okay, this is a 4-hour chart. This would be the February low. It looks like a triangle here. And what I've been watching is this Andrews median line here. You see that it provided resistance, and then support again, then support, resistance, support, support. So as long as we're under this line here, I have no plans of going long. And if this turns out to be an ABC pattern, ABC, where could it find support down here? That's what I want to look at next. So let me explain some of these lines here. First of all, I have a channel line drawn from the high to this pullback high, and the opposite side of that trend line is down here, and this channel could be support. I also have another channel made from this second high, and this channel could be support. I have this Andrews median line, this channel, and this channel, and that low volume node all wind up around here, down around 25.19, 25.17, somewhere in between here. And then remember the 100%, if this was an ABC pattern, we were looking for 100%. That larger Andrews median line that I showed before winds up there. This median line here winds up close to it. This channel here, it's a little past that 100% line. So I know it's a lot of areas right here. So this line is the previous low. This line is the low volume node down around 25.20. This line is the 100% mark for the ABC pattern. And then you have these areas here where you have trend lines coming together. This area down here where trend lines are coming together. Again, if this turns around from right here, this could be an ABC pattern, A, B, C, D, E, a triangle. Then we would look for another leg up. If we did turn around right here, I'd be looking in this area from this breakdown point over to the high here, maybe off of one of these trend lines, that it could find resistance up here. So you can check out these levels that I'm looking at. Okay, I'm going to end this video here. The next video will be on market profile. So if you watch any of these videos to the end, you can see the link for the next video in the series. This is Bill Wood, and if you're watching this anywhere other than my blog at Discipline Trading Decisions, please go there now and check out our other resources. And while you're there, sign up for our weekly newsletter. And this is a reminder to trade according to your trade plan. Don't do what I do. You have to believe in your analysis of the market in order to stay disciplined and true to your plan. Hey, I really appreciate your likes, comments, and your shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.